Advanced Risk Management, Multi-Timeframe Scaling. In this video, I will explain how to survive, stack, and scale without self-destructing. Welcome back. By now, you've built the foundation. You understand structure. You know how price moves, how liquidity is hunted, and how institutions trap retail. But none of it matters if you can't protect what you've earned. And none of it grows if you don't know how to scale what works. This video is about two things: preservation, so you don't blow your edge; multiplication, so your edge actually matters. Let's get tactical. The core lie: risk 1% per trade. This is the beginner dogma. Just risk 1% per trade and you're fine. But here's the problem: that rule doesn't adapt. It treats every setup the same. And when you treat all trades equally, you reward your weak ones and punish your best. Professionals don't risk the same on every setup. They modulate risk based on quality, just like banks do. Think of it this way: high confluence setup, stack; mid-tier setup, go light; low clarity, sit out or size down to almost zero. This is how you protect capital. This is how you grow a small account, without revenge trading or gambling. Capital is your oxygen. Let's simplify this. Capital isn't just money. Capital is time, freedom, and survival. Every bad trade, every oversized position, every overtrade, it's like holding your breath deeper underwater. You don't risk capital because you're confident. You risk capital because your system is confident, and only then. Before you risk $1, ask: do I have multiple confirmations? Has liquidity been swept? Is there a change of character on my entry time frame? Am I emotionally neutral right now? If even one of those is shaky, your capital stays untouched. Period. Build a 3-tier risk model. Here's a simple, scalable structure used by professionals. Tier 1, exploration, 0.25% risk. Low conviction. Maybe you're testing a new pattern, entry style, or zone behavior. Use exploratory risk. You're learning, not expecting. Tier 2, standard execution, 0.5% to 1% risk. This is your clean setup. Change of character confirmed, liquidity swept, candle confirmation on entry. You've seen this 100 times. It matches your system. Pull the trigger, with structure. Tier 3, high probability confluence, 2% plus risk. Only when everything aligns: multiple timeframe structure, fresh supply/demand zone, clean break of structure, and higher timeframe alignment. This is when you go heavier, not recklessly, but surgically. This model keeps you alive. It also gives you room to grow when it matters most. Multi-timeframe positioning. Here's where most traders stay amateur: they see a setup on one timeframe and go all in. But the market breathes across time frames. Real traders stack bias top-down, not bottom-up. Here's the protocol: start with high timeframe, daily or 4H. Define direction. Identify macro zones, change of character, break of structure. Refine on mid timeframe, 1H or 30M. Watch for internal structure. Align short-term bias with macro. Execute on lower timeframe, 5M or 1M. Wait for refined entry, liquidity sweep, change of character, microstructure. This isn't about perfection. It's about alignment. When all time frames agree, your trade isn't just a play, it's a probability machine. Compounding with intelligence. You don't need a 90% win rate. You need a few clean wins, compounded with discipline. Example: risk 0.5% on weak setup. Risk 1% on clean confluence. Risk 2.5% on perfect setup with stacked time frames. Hit 3 clean trades in a week, you're up 4 to 6% with minimal drawdown. This is how you turn a $5,000 account into $50,000. Not by gambling, by compounding precision. The death spiral, overtrading after loss. Here's the truth no one says: most blown accounts don't die from bad setups. They die from the next 3 trades after a loss. You get frustrated. You size up. You trade lower quality. You just try to make it back. That's the trap. The algorithm knows. The market smells blood. Here's the rule: after a loss, risk resets to tier 1. After 2 losses in a row, step away. After 3, stop for the day. Full stop. Discipline isn't about avoiding losses. It's about making sure 1 loss doesn't turn into 3. Why 99% of risk management videos are worthless. Let's be honest. Most risk management content is recycled trash. Same slides. Same advice. No logic. No nuance. Risk 1%. Use a stop loss. Control your emotions. That's not risk management. That's kindergarten. True risk management is dynamic sizing based on probability. Knowing when not to trade. Reducing exposure after emotional triggers. Scaling based on evolving structure. Tracking how setups perform across volatility regimes. That's how prop traders do it. That's how funds do it. And now, that's how you do it. Trade less, grow more. Here's the paradox: the traders who take fewer trades often make the most money. Why? Because they wait. They risk more only when it's worth it. They avoid mediocre setups. They stop trying to make something happen. You don't need to trade every day. You need to protect capital like it's oxygen, and only deploy it when the odds are stacked so clearly that you'd bet on it with your eyes closed. That's power. That's edge. The unfair advantage: emotional cash flow control. Most traders treat profit like a reward. Professionals treat it like ammo. If you made 4R last week, don't celebrate. Don't loosen rules. Don't treat yourself with oversized risk. You scale based on structure, not emotion. Every dollar in your account is a weapon, and every weapon must be deployed with precision or it backfires. Closing truth: capital isn't just protected, it's leveraged. Risk doesn't mean danger. Risk means strategic exposure to asymmetric opportunity. You're not here to survive. You're here to compound strategically, when the market invites it. So from this point on, no more fixed risk. No more emotional reactions. No more treating all trades the same. You've graduated. You now modulate, scale, and control capital like a true operator. And in this room, that's what separates the lucky from the lethal. Welcome to the next level.